Hello financial investors and welcome back to the channel. My name is Brent and today we are going to be doing our weekly recap for the 6th through the 10th of April 2020. We're going to go ahead and take a look at some of the information that was posted over on Facebook this week, but then we're going to be jumping and taking a look at the recap for this week, go over the four main indexes, take a look at the change for the week. It was a pretty exciting week with the indexes all moving over 10% to the upside, putting us very close to just being negative 10% year to date in the S&P and a few other indexes out there. So we're going to be taking a look at the four main index. We're going to go ahead and take a look at stock futures, which really don't mean too much going into Saturday and Sunday. And then we're going to look at the entire S&P 500 map for this week, this past week, to kind of see what stocks were the hottest ones out there, which one really rebounded higher. Then we're going to look at financials, home builders, semiconductors, oil, the dollar, gold, silver, and bonds, and then take a look at mortgage rates at the very end. This is just a video I like to do for historical recap. That way we can kind of see the events of the market on a week by week basis, depending on what is really going on out there in the market. And right now we have this economic shutdown, and right now within the United States, the Fed is printing trillions of dollars, billions of dollars, handing it out to bail out businesses, handing it out to help stimulate the economy by helping those small businesses, those corporations, those LLCs, in order to kind of get them money in order to pay their employees or to pay, all their financing. They kind of boost this economy. Plus, President Trump wants to reopen the economy here slowly and begin to get some of these businesses back open. And that's what's kind of causing this whole sort of market condition here in the short term to move higher. We really don't know how long this will persist because right now we've just cleared our first quarter of 2020. We're really not going to show the effects of the current issue as far as the shutdown a little bit into the second quarter, and then if this comes back and swings back harder in the fall winter months, then we may need to shut down once again, and this will be a prolonged shutdown as those months are generally a little bit harder as far as the event, and we may have to shut down until next spring or so. So we'll kind of see how it plays out. I don't know what's going to happen in the future. All we can do is continue to dollar cost average, stay invested regardless if we are moving higher, moving lower, and the way that we create our wealth is just investing long term, buying at when the opportunity exists, and just continuously buying into the market regardless of whether it goes up or whether it goes down. So let's go ahead and get into the video. That's a very long intro. So if you are brand new to my channel, have not yet subscribed, definitely hit that subscribe button below. If you do enjoy this video, find it helpful, hit the thumbs up. And if you have any comments or questions, drop them into the comment section below. And let's go ahead and get into it. So I did share a win of the day last week on April 6th. I got a call from my mortgage company. I go through Freedom Mortgage for my VA loan. I had a current rate of 3.75, which in itself was not that bad back when I got my loan in, I believe, 2015, 2016. And now they gave me a call saying, hey Brent, we can offer you a lower rate than what you currently have at a 3.25. I was like, no, I do not want a 3.25. I looked over the loan here. You can actually see the screenshots that I took. Initially, they were offering me a 3.25% rate with closing costs nearing $2,000. So that $2,000, like, they said it wouldn't cost you anything out of pocket. All you would need to do is just go into your title and sign, and you'd have a new loan with a lower rate. I looked over the documentation, looking at the current rate, looking at my loan amount, moving from I owe about $113,000 currently on my home, and I was like, no, I don't want my loan to come back up, $2,000, $3,000 higher than where it's at right now. I've worked these past few years paying down the principal. I want to keep that, and also my loan term was going to be resetting to 30 years. So my amortization rate was going to be reset. So I said, look, I don't want this. If you want to have me refinance, which I would like to refinance, I understand there's a really good deal out there. I would like to keep my current loan term of 24 years, where I'm currently at. I want at least a 2.75, so that's a 1% difference to the downside, and I want some more lender credits. I don't want to be paying $2,000 onto my loan in order to refinance this. So what they did here at the bottom is that they kept my loan term 24 years 11 months. It's a refinance. They basically just, it's going to cost me $490 out of pocket in order to get this refinance. So instead of going and get a loan of $115,000, I'm getting a loan currently where I'm sitting at nearly of $113,000. I'm getting an interest rate of 2.75%. I'm paying $480 in closing costs versus nearly $2,000. And you know, the good thing is that my loan term stayed the same. That means that I'm getting a nearly 1% reduction. I'm getting a lower loan. I am paying very little fees and closing costs, and my loan term stays the same. So that saves me 6 years of adding debt to my current time frame. So yeah, I'm going to be saving, you know, 5 digits over the course of the next 24 years on interest. So that was a good little win there with my mortgage company. And I think that was all I posted. I posted a meme here. Not sure if I'm trading better or if the market stopped going down, which is just funny because this week has just been crazy. You know, you'd think, what kind of news is out there really driving this market higher? And it's really just the Fed and the hope that's out there that we are going to be reopening and that the numbers are going to begin falling down. We're going to fall and it'll eventually kind of go away in itself. So the M1 Finance account that I do have over for my wife's account, it has now positive by about 6% currently. We can see we are still negative as far as market gains, but with time in the market, because this portfolio was started back in 2018, that means we have 2 years and 3 months invested, and those dividends really help out this portfolio, basically put it in the green by 6%, and those dividends are now generating over $1,000 in dividends every year, along with my $6,000 contribution. So that means $7,000 right now is going to be going in on a yearly basis, reinvesting into stocks and buying up more dividend companies, which are going to be paying out more dividend companies. So this compounding effect is getting larger, and we'll kind of see the progress of that in the upcoming years as this portfolio begins to generate more and more dividends and reinvest into itself. So that's enough there. The S&P 500, the Dow Jones, the Nasdaq, and the Russell 2000 put on some incredible gains this week, gaining over 10% this week. So we were only open Monday, Tuesday, Wednesday, and Thursday. We had Good Friday on Friday. So the stock market there and other brokers and such were closed on Friday for Good Friday. So over the course of the 4 days that we were open, this is showing an increase of roughly 12.10%. I believe this is fairly accurate for Monday, Tuesday, Wednesday, and Thursday. So really big gains there on Monday. Coming out at the 8, we gapped up higher in the day, and take a look at the gap up. In addition, towards the end of day, huge gap up. We did lose a little bit of steam here on Tuesday, but really that was that was basically just a flat day on itself, negative 0.16, before rallying once again on Wednesday on news that the Fed was pumping, I believe it was some amount of billions of dollars for more small corporations, businesses out there. So there's a lot of programs out there currently being enacted for small businesses and such. So that's really what kind of played out in the market this week. All the markets were basically the same. Monday higher by 7%. Tuesday a bit flat. Wednesday, Thursday just continuing to move to new, recovery here. So year to date, the S&P is down 13.65. The Dow Jones is still in third place, being down 16.89 of the 3 main indexes. The Nasdaq is in first place as far as negativity, only being down 9.13. Basically the same sort of movement there on all the indexes, down 0.33 there on Tuesday. And the Russell 2000 put on the biggest gain this week, with the whole hope that these small mid-cap businesses are getting a lot of help right now. They're getting funding during this downturn, plus they may be reopening here in the short term. So that means maybe their second quarter will not be as bad as it was assumed to be, and maybe their third quarter and fourth quarter will be saved. we may just lose 1/4 of 2020 versus 2 or 3/4 of 2020. So this has yet to still be seen. So the Russell 2000 has been hit the hardest here year to date. It is still down 25.28%. But if everything goes in order, we may see the Russell 2000 putting on some of those big gains in these upcoming weeks, just depending on how the news and media and what is going on out there in the world kind of goes. Right now, stock futures are moving higher. This could all change on Saturday and Sunday with maybe some news of a deal between Russia and Saudi Arabia not coming to fruition, and we may see stock futures once again fall. And we did see oil fall a little bit further this week, so we'll kind of take a look at that here in a bit. So here we are with the S&P 500 heat map, kind of taking a look at on Thursday. So Thursday, a lot of green out there. All the sectors out there are essentially green besides semiconductors, and those have been doing amazing lately. So we can see AMD, Intel, Texas Instruments, Broadcom are all negative here on Thursday. But overall, if we take a look at the weekly performance, we'll see that these are all still very positive by anywhere from 5, 7, almost 9% there with AMD. So they definitely put on some gains. Maybe they lost a little bit of steam going into Thursday, but overall, take a look at that heat map. That is one of the brightest heat maps that I've seen in quite a while. There's really not a whole lot of red out there. We can see Kroger's down, Gilead Sciences, we see Tiffany & Co. Just very sporadic. Citrix Systems, which has been pushed extremely high here in the short term. I saw a lot of investors move it into Cisco, move it into Citrix, move it into Zoom as some of those work from home plays. So definitely interesting. I've been really interested in buying up a lot of REITs. So SPG, take a look at Simon Property Group over a whopping 54.9%. Also, Realty Income there, 24.24. I noticed my Tanger Factory Outlet that I purchased on Monday also shot up extremely high, along with SPG and all those other REITs within my portfolio. And just lots of green out there. Take a look at those financials. I believe between the financials and the real estate investment trust, I think those are some of the largest sectors that put on quite a bit of gains this week. So it was just some massive gains out there. So if you're playing with a bunch of individual stocks, buying up opportunity on the low, you could be in for some really good positions here in the short term. Okay, let's take a look here at the financial sectors. We already saw financial sector is one of the greenest there. A lot of their positions nearly up 20%. Wells Fargo 21, Bank of America up 20.86, Citigroup 20.85, JPM and PNC right around that 16-17% mark. But overall, huge up there. So the ETF that tracks the financials is XLF. This is up 16.57%. We have semiconductors. Again, they've already been doing really well as far as the recent weeks. So this one's up 10.45. We have home builders up a whopping 24.12. Oil still down this week. As we said, oil is going through a bit of turbulence with deals and all sorts of, a lot of talk, but not a lot of action. So until something kind of goes on here, I think this is a good opportunity. If you were to buy oil in this $4 range, I don't know how much further this thing could go, but you have a lot of potential upside just depending on your short-term vision. It could, I don't know how low it could go, but let's see, what's the low here? $4.03 is the low. But imagine the upside potential of oil if you just wanted to buy into it, and this is ticker symbol USO. The dollar continuing to stay pretty high, nearing this $100 here for a little bit on the 9th, and then kind of trimming back down. Oh, this is actually right now. So at the beginning of the week, it was already pretty high. I believe it was over $100 here early in the week, and just kind of trending down. But still, overall, it's not. The map, the graph makes it look like it lost quite a bit. This is actually not too bad. Over the year-to-date method, we can see this dollar has risen by quite a bit. So, interesting movement there. Silver and gold and bonds are also positive this week. So, it's really interesting that we saw the stock market put on a huge gain of 10%. Then we also see the silver, we see gold, we see bonds moving higher. So silver put on 4.73% this week, gold put on 4.41, bonds put on 1.7. So even some of those positions that are generally hedges to the market are also moving higher here in the short term. And mortgage rates are moving lower this week. So another opportunity to refinance and take a look at rates. You know, everything's been within this range, 3.25, 3.75. If you want, go take a look what they're offering. Tell them what you want in your offer and why, you know, what you would want their offer to be. Be specific, you know what other mortgages are offering, and, you know, get different, what are they called? Different, you know, go talk to different ones to get different evaluations. So 3.58 there versus 3.74 a week ago. So that is going to be wrapping up this week's recap of the week. So let me know what you think this next week's going to happen. You see the markets beginning to, the businesses, the small mid-cap companies beginning to reopen here slowly. How is your local economy going? Are you going out still quite a bit on, you know, any sort, you know, any businesses in the city? You know, I've actually been staying within my home quite a bit during the week. You know, I obviously work from home, and then on the weekends, wife and I have been going on hikes every once in a while. I'm just taking the kids out in some back hills and just kind of walking along those. Really nobody out there anyways, so just kind of enjoying the being out and about. So that's Oregon for you. But that is going to be it for today's video. Thank you all for tuning in. If you have not yet subscribed, I would really appreciate it if you do hit that subscribe button below. If you did enjoy this video, find it helpful, entertaining, definitely give this video a thumbs up. And if you have any comments or questions going over the stock market, dividends, real estate, personal finance, or just want to drop a comment, you know, anything question-wise, drop it below. I do read and reply to all my comments, and that is it. Thank you all for tuning in. I will see you next time. Have a great day. Bye.